Hey guys, so one of the things that everybody has in his or her mind is to how to budget. Means we are getting some amount of money in from our institute as a stipend, but how to budget? So in order to answer this very important question, I have my friend. His name is Vishal Jain. He is a CA and he has come here to actually answer my stuff, that how we can budget our stuff to so that we can save for some of the other things. So I welcome you, sir, to my channel, and I'm really
Thank,
happy that you came to answer this question for us.
thank you so much for inviting me to your podcast. Thank you so much.
So I would like to explain you what I actually want from you. Okay. So I have a case study in my mind. So let us say I'm doing my PhD from IIT Delhi. So
Okay.
for the first 2 years, I will be getting an amount of 31,000 as a business stipend, plus 8 plus 7 as my house rent allowance. So all in all, I will be getting a 38,000 for the first 2 years. Now after
Okay.
2 years, I will be getting a 35,000 as my stipend, plus my house rent allowance, which will go to around me is na 40,000. But if we see the cost of in inflation in our Misna country, so
Yes.
in order to as I have that in my mind too, I will just stick to the basic amount of or a basic amount of 38. So I will say that
Okay.
for all of the 5 years, I am going to get a 38,000 in the hand. And now as you can see that out of those, I will be having some of my expenditures also. I will be I
Yeah.
will be spending my time, my 10,000 on the rent. I will be spending 10 on the food. I will be spending 10 on my travel and the other stuff. So I'm left with 8,000. Out of that
Yes.
8,000, I have planned it like this, that I want to spend 1,000 for my life insurance and 1,000 for my health insurance. And after that, I also want to make an emergency fund, or and I just want to put every month around 500 bucks in it.
Okay.
Since the bad time can come on anybody. And when I planned all of that, I still have 550 rupees in my hand. Now, so this is the basic budget that I have made. Now, what I
Okay.
wanted to actually ask from you is that since I'm planning to buy a health insurance and life insurance, and I'm willing to pay 1,000 every month into it. So,
Okay.
which one should I go through, and how should I judge that which policy is a nice one for me? So
Okay.
this is the one thing that I want to know from you.
Okay.
The second thing is, Tim, how can I make an emergency fund? Means I want. How can I do it? How can I do this stuff?
Okay. Okay.
The third thing that I have in my mind, let us say I have a short-term goal and I have a long-term goal. For a part of the short-term goal, I can say that after 1 year, I want to buy a bike, which will cost me
Okay.
around 60 to 70 thousand. And
Okay.
and after that, I also have a long-term goal that after five
Hmm.
years, I want to buy a car. A very
Okay.
simple car will cost me around 3 to 4 lakhs. If we even
Yes.
keep it up to 3 lakhs, So this
Okay.
five, so I want to know about all of these things. That how should I plan these things? So the first thing is health and life insurance. Which one to buy and how do I finalize that which one is nice for me? The first thing. The
Okay.
second thing is
Okay.
how do I make an emergency fund? And the third thing is since I have this long term and short term goal, how do I manage my fund so that I can fulfill my both long term and short term goal? So this is what I
Hmm.
want to know from
Okay. Okay. As per your situation or the case study which you have provided me, I have presented the breakup of the expenses or and the investment that you would be making from your 38,000 of income.
you. Yes.
So as we can see that rent and electricity would cost you around 10,000, food and sundries around 10,000, travel and entertainment around 10,000 each. So in, and for the insurance you are sparing around 2,000
Yes.
and emergency fund around 500 and save and the balance of the savings would be around 5,500 which would be used in meeting your short term as well as your long term needs.
Yes.
So the first first question was regarding insurance, that is life insurance as well as health insurance. So before coming to that question where you have to invest, let us first understand why do you means have to take a life insurance and then health insurance if you want to invest over there. So thanks. Huh. So the question is why insurance? The major reason or the means the most important reason is it gives a financial shielding during any kind of exigency. Suppose you are not aware whether till what age you would be alive and when will some exigency come in your life. So insurance gives you that protection, means you get a financial shielding. You don't means your family will get that benefit, and in case of any accident or in case of any major injury, you get a very handsome amount that would help you survive in your life. So the first and the most primary reason would be that, and the second thing is if even if you don't means have any contingency or any and you don't meet any unfortunate incident in your life, you get a healthy return of say around 4.5 5%, 6% on any insurance that you take. So that was the main that were the main reasons for taking an insurance. And other benefits include like you get tax benefits on the insurance premium that you pay, and that is deductions under section 80C and 80D of income tax act. So these were few benefits of taking the insurance. Coming to the next question is about life insurance, means how do you take a life insurance, means what kinds of plans are there. So I have listed down a few categories of plans that are available in the market under the following heads. So I would briefly go through them and explain a bit about each of them, and in case you need more explanation or you want to know more about it, you can always contact me and
Yeah.
know about
Sure.
it.
Sure.
So the first one is endowment plan. I will talk in very layman language so that everyone can understand. In endowment plans, it is basically you pay a premium for say 10 years or 15 years, and after the end of 15 years you get an amount for say coming 15 years. So basically it is an investment where you foresee that you would be requiring a certain sum of amounts each year in the coming like say after 15 years. So suppose you invest like around 10 lakh rupees in the first 15 years, you would get a healthy return on that 10 lakh rupees, and that would be spread across say from the 11th year to the 20th year that you would be living. And it includes like any accident benefits, and all of the benefits are always included in this. In money back plan, it is a kind of plan where you get money, means you get your return at a regular interval. Suppose you invest for say 10 years, you will always get you will always get that lump sum amount at the end of 10 years. However, you will also get a means a significant amount at the end of say 5 years, means even during the time of your investment, that is you would be investing in the initial 10 years, you will get a handsome amount at the end of say 5 years, and then you will get a major chunk of your money at the end of 11 years. The third plan would be whole life plans. It is in this plan, basically, say you invest for say 20 years and 20 25 years, and after 20 25 years you will get that from the 26th year you will start getting benefits till the end of your life. So whole life plans are basically that. In single premium plan, it is useful for those who have say a good amount of money, say about 5 to 10 lakhs of savings at this point of time. They can pay a single premium, and after say around 5 years or for the period that they invest, they start getting returns out of it. They get a regular return every month or every year out of it. In term plan, the term plan is a very like novice kind of plan where you don't get any benefit if you live through it. Say it is a very simple plan. For example, if you want to take a life insurance and you invest 1 lakh rupees, and if you like in case of any unfortunate incidents or on your death, you or your means nominee will get that amount. However, if you survive that plan period, then you won't get anything. So this is basically a pure risk cover. So these were a few kinds of life insurance policies that I briefed you about. And for any information, or if someone wants to take a life insurance policy and wants to know more about it, you can always contact me on my contact details, which are given as under. So coming to the next thing, which is the health insurance. See, the first and the foremost thing is at this point of our lives, when there are so much uncertainties, and as like bachelors, or say as like youngsters who are living in this age of say age bracket of say 20 to 30 years, we are having a very unhealthy lifestyle, as most of us would be like in the partying, or might not have a healthy diet because they're living outside. So health insurance becomes a very important thing in our life. So I've listed down some important aspects that needs to be noted while taking a health insurance. So first one would be whether you are covered under Ayushman Bharat scheme. See, a lot of people would be covered under Ayushman Bharat scheme, which is a government initiative, and the government provides a family cover of 5 lakh rupees per year for a family, irrespective of the number of members in their family. So if you are covered under Ayushman Bharat scheme, it is advisable you check your eligibility. It is available online. It is very easy to check your availability. So it is advisable first you check your eligibility for this scheme. And if you are eligible, then you don't need to take any other health insurance. Okay. The second would be, suppose if you are not eligible for this scheme, then what are the things that needs to be noted? The first one would be health insurance cover that your insurer is providing with respect to the premium that they are charging. Generally, people do this research and then only invest in the insurer, because they want to means keep in mind that he's charging the best premium, or the lowest premium that he's charging, and he's giving me the best benefits. The second is the claim settlement ratio of that insurance company. Generally, if the insurer is giving you if the insurer has the claim settlement ratio of more than 90%, it is advisable that you take insurance from that company. The third one would be cashless facility. Now, many of the insurance companies have their connections with various hospitals in your city. So before investing in your health insurance, it is very important that you check which all hospitals are covered in your area, so that whenever you get admitted into that hospital, you don't need to pay cash out of your pocket. The health insurance will directly transfer that amount to the hospital. That is all that you are getting admitted into.
Okay.
The next point is daycare and OPD facility. If it is covered in your health insurance, many insurance policy cover these, many don't. So it is better you check it yourself once and then only invest in it if it is covered or not. Because nowadays you don't need to get admitted every time that you go into the hospital. You
Yes,
can
yes,
only go and consult the doctors and the physicians over there.
yes,
Uh, the next point would be diseases covered. You need to check whether it covers major diseases. The health insurance policy covers major diseases that are prevailing in our country or in our society right now. The next one would be individual plan or family floater. So in health insurance policies are of two kinds. Like you can take it for yourself and you can take it for a family as a whole, and you can get that deduction even if you take it as an individual or as a family. So you can check your premium amount that you would be paying, and whatever benefits you can take that plan. The last one would be critical illness, whether it covers critical illnesses like cancer or some other terminal diseases or some major diseases. So you must always check these points whenever you take a health insurance policies. And in case you need to know more about it, you can always contact me.
yeah, sure.
Coming to the next aspect, that is where can I invest my emergency fund savings. So emergency fund is basically a fund that you can encash it at the like latest hours of the night, or at any given point of the day you can encash it. So means these options which I have listed as under are the safest option that you can invest in. It provides a very healthy return of around 2.5% to say 6.5% or 7%. So the first one would be recurring deposits. Since you are getting 500 rupees, you are saving 500 rupees every month for your emergency fund. This is the most advisable option, that you invest in recurring deposits. In private banks, you can get easily around 6.5% rate of interest
I have
for
a
these
thing in my
investments.
mind. As you are
Yes.
saying about the first one option that we also call it as an RD.
Okay.
I have heard somewhere that the money which is once, like I have an RD for 1 full year. I have heard this somewhere that if I have an RD for 1 full year and I am paying 500 in it every month. So for that 1 year I cannot even touch that money. So is it so? Otherwise, how that can act as an emergency fund if I cannot
Okay.
touch it?
Okay, so the answer is very simple, that you can always take out your money from the recurring deposit investment that you have made.
Oh,
The principal amount won't be touched. Only the bank will charge you a very like nominal fees for encashing it at an earlier stage. So you might means lose on some interest. However, you can encash it at any point of time. And
okay.
the same thing is with fixed deposits. Fixed deposits are basically you invest a lump sum rather than on a recurring basis. So that is the major difference. The third one would be physical gold or gold bonds. Well, nowadays, as you have noticed, that the prices of gold is rising at a very rapid manner.
Mhm.
So you can invest in gold. It is like a liquid form of investment. You can encash it, and means the two types are the physical gold and gold bonds. So in what is the major difference between the two? In physical gold, you are the custodian of that gold.
Yes,
However,
yes,
in
yes.
gold means you would be having that in your home. You can see
Mhm.
it, you can feel it basically. In case of gold bonds, you are actually virtually means purchasing or investing in that gold, and you get a fixed return of 2.5% per annum for the gold bonds. Plus, you get the benefit of any increase in the value of gold in the stock market. So
uh, I have this thing in my mind. Like as you said that there are two types. One is the physical gold and one is the gold bond. The
yes,
difference, the basic one, as you said that in the terms of a gold bond, we do not actually get a gold, but we might get
Yeah.
some paper which says that I have this amount of gold.
Yeah. Yes. Yes. Yes.
Now what I
Exactly.
have in my mind is that when I actually need that money, okay, now see, I have 5 gold bonds. I need my
Okay.
money, so I just want to
Okay.
cash one of my gold bonds. So do I have
Okay.
to actually go to a shop, or do I have to go to that bank to encash my gold? And how, and will they be paying the same amount as it as so the amount that they will be paying will be what, at the time when I bought it, or at the time when it is a now amount of that bond, now amount of that gold?
Okay. So in case of gold bonds, the situation is that if you have purchased it, say at rupees 50,000, and the current market value of that of the gold is around say 60,000, then if you are encashing it today, you will get the value that is prevailing in the market today. So
Okay, so
you don't.
60,000.
Yeah, yeah. So you
Okay.
will get that increment in value, and that would be the case.
So so like so can I buy a gold bond from a shop, or do I have to buy it from a bank only?
No, it is always from a bank. So
Okay.
gold bonds are not sold in a
Okay.
shop,
Okay. I
and
didn't know about that.
yeah. So one thing I would always like to recommend you, in case you are buying physical gold, it is always advised that you buy it from a very reputed shop and not from any shop that is in your locality. It must be a very branded shop, so that in case you want to sell that gold, you get a means the purity is intact. Means the purchaser who would be purchasing at that time, he would be ensured that the quality is intact and there is means no false kind of thing over there.
So as I talked to you about that, my long term and my short term goals also. Please tell us about that.
Yes, yes, yes. So coming to your short-term and long-term goals, I have means depicted that in this chart. Suppose means you would be saving around 5,500 per month out of that 38,000. So I have broken down that in the following chart. See, like for the short-term goal, for the first 12 months that you would be means you have decided that you would be purchasing a two-wheeler in the coming year, so you would be saving around 5,000 per month for 12 months. And if you invest it in say RD or any FD, you would the compounded value would amount to about 61,932 rupees. So that would be sufficient, and that would be sufficient to buy yourself a two-wheeler. And coming to the long-term goal, see, like means for the first year, you would be having another 500 rupees that you would be investing for say 5 years. And for the next 4 years, you would be saving around 5,500 per month. And the compounded value at 6% rate of interest, which is very conservative rate of interest. You can get much higher rate of interest in the market. The compounded value would be around 3 lakh rupee, 3 lakh 4,200 rupees. So this was the calculation. And coming to where do I have to invest my long term for my long term and short term targets, the most easiest, safest means the best option would be recurring deposits for short term, as well as you can invest it for long term. However, if you want like greater returns on your investment, see, recurring deposits would give you a interest rate of say 6%, 6.5%. However, if you want to in means get more returns out of it, you always have that option of investing in mutual funds, SIPs, or share market. Means you have to always keep this in mind. Whenever you chase for higher returns, the risk involved gets greater. So it has a very direct proportional relationship. The risk and the reward will always have a direct relationship. So and you have to keep in mind, whenever you invest in shares, if you don't have the requisite knowledge about the stock market, it is advisable that you invest in some blue chip stocks like Reliance, Infosys, or Bajaj Finance, such kinds of stock which have always performed irrespective of the crisis that the country goes through. So it is very means very advisable that you always invest in blue chip stocks if you have if you want if you don't want to means gamble with your money. I would say it in that way. Uh,
So I'm really thankful that you answered this question in a very, very nice way. I hope
yeah.
this would have been able to, this would be able to help many of those who will listen to this video. And I also got to know a lot of more things from this. I'm very thankful to you that you cleared all of these stuffs for us.
Thank you for inviting me to your podcast as well. It was nice interacting with you. Thank you.